Good morning, everybody. I'm just going ahead and go live on YouTube about a minute early here. Hopefully, everybody can get to YouTube. I sent that out on the constant or convert kit this morning via your email. So hopefully you got that. Obviously, if you're here, I know X is down, so the X feed will not be live. That's why I sent the YouTube out early. So hopefully everybody can file in and be able to join us. So appreciate it, everybody joining us. Hopefully X will be up later this afternoon for our pre-market post, but we'll go over it live, and whoever's joining us will be able to have that information and content. So let a few more people file in here. Let me check X one more time. Yeah, it's still down. Okay, we'll go ahead and get started. Everybody that's joining us this morning, obviously a few more people file in. Again, thanks for joining us on YouTube, as X seems to be having problems and Cloudflare is down, obviously affecting AWS services also. So good news is all of our services are up with our members. Cool, Tom. And all of our data is flowing well so far this morning. So we have all of our pre-market prep trading plan ready to go, which is good. So, all right, as always here at Game Edge, we start with our 3 pillars: sentiment, structure, and trend. This is Michael joining you from Game Edge on Tuesday, November 18th. And again, we'll look at our market trend model to start. That's our basis of our trading plan in the day. Quick orientation: the bolded white line is the cumulative tick, or what we refer to as the CT. This market trend model is based on the tick index. So that is buying versus selling in the overall market. Fairly clear and easy to see what's been occurring over the past few days. There's been more selling in the overall market. The bolded white CT is under the shorter term momentum moving averages, or what we call the railroad tracks. Again, we just place these on there for momentum. We continue to see failures as we try to retest those shorter term moving averages and then move to the downside. Clearly, yesterday was a risk-off day, significant selling in the overall market. Up here, new highs versus new lows breadth indicator continues to show that new lows are outpacing new highs. Sorry about that. And then moving on to our filter cumulative tick indicator, plus 1,000, minus 1,000, larger block orders, obviously to the downside, indicating institutions are selling more than buying. And this is what has happened previous multiple days. And then if you scroll back, we had significant selling days over here previously also, even after the bounce here. So we continue to see institutional selling within the overall market, and then new lows outpacing new highs. So if you're a bull, you would need to see this do an about face. New highs would need to start outpacing new lows, and the filter cumulative tick indicator would need above 0 and moving to the upside. Obviously, the first line that we would need to recover for the bulls is the shorter term moving averages. You need to see the bolded CT move above that and then above our colored ribbon. Our colored ribbon continues to compress and be in a negative slope. Obviously, if we're below the colored ribbon, our mechanical portfolios are turned off. The one thing that we don't want to see if you're a bull is the red crossing below the cyan. Again, that can indicate a longer term downtrend starting. You want to see the red stay above the cyan, and we want to recover this fairly quickly. So we'll watch how this plays out into the end of the month with the expiry, and then obviously into December. All right, let's move on to the sentiment and structure portion of our presentation. We look at the SPX options market. This is obviously the largest, most notional value, and we separate the SPXA. These are our cruise ships or institutional positioning, big boys and girls, as we've labeled here, from the SPXP. We are still call dominated. You see the monthly expiry here, 16% GEX expiration, but then December is our largest expiry now, obviously, when you head to the year end. So we'll be watching that. Overhead, we are seeing a significant amount of in-the-money puts. This structure continues to morph from the green net delta we just had a few days ago. And then now we're seeing significant out-of-the-money put speculation, even though the largest strikes are still call dominated. Significant erosion of the overall complex. So again, this can morph into put dominated via all expiries, and then that would be the possibility of moving into a more bearish state or significant pullback in the overall market. So key areas below us, we'll watch these. 6,600, obviously large strike there. If we test that today or get close to that, that will definitely give us some more information. Then we'll watch this overall structure continue to change here. Moving on the SPXA November expiry, obviously this is for this Friday. Again, we are put dominated. This net GEX is negative 4,000, so it's in what we call the noise floor, where this could easily flip back to call dominated depending on what the structure is. Good morning, bro. Again, overhead, significant amount of in-the-money puts overhead, so these are going to continue to be a headwind for price appreciation unless we see this sentiment and structure change. We do have calls below us, though, that will continue to be supportive on the downside. Again, 6,600 and 6,650, those large areas and gradients we've outlined with purple. Pre-market, you also already noticed that we've tested 6,650 multiple times. Good morning, Nick. So again, structure continues to erode into a more bearish state. Put dominated, price appreciation will be difficult, but we do have some supportive action below us. So not completely falling apart yet below us. If we see this green net delta continue to morph into red with out of the money put speculation as well as in the money calls closing, then again, we would look for more downside in the overall market. It is great to watch this day over day. I encourage everybody to go back and watch our previous pre-market preps. And even if you just zoom in on the SPXA charts and see how the structure and sentiment change day over day. First, we saw some erosion. We saw spatters of red. I talked about that probably about a week ago. I said nothing really significant. The structure tried to repair itself, but then we started moving back to the downside, and this red just came in full force above us. Obviously, out of the money calls were leaving. We talked about that on the GEX ratio, and that was exposing in the money puts. So price appreciation was going to be difficult. And we just continue to see these cycles over and over within our overall game plans and our homework. And this really helps us stay on the right side of the market and understands what's happening with the overall positioning and options structure. And then obviously, as we say, the tail wags the dog. So where market participants are speculating is where the market goes. And we continue to see that day over day. Moving on to the SPXP, all expiries turned on. These are our speedboats. These are short-term, obviously, contracts turn over much more rapidly. You'll notice we are put dominated here. The exposures are GEX expirations here. Implied open is roughly around 6640 to 6650. You see that there. That's the PGEX level. That's an important level to get above or look for failure. We closed below, or actually opening below the previous day close, which again is bearish. We're opening below transitions, which is also bearish. So you kind of get the theme here. If we do see a move to the upside, first areas would be 6650, 6670, and then be watching 6700, which is the bottom of the transition area. And then a key overhead strike that we could see some failure heading into the day. All right, let's move on to the XPXP GEX ratio. We've been talking about this really day over day. Interactive chart, as always, here at Gamma Edge, so you can zoom in. Yesterday, basically moved down, but then almost an inside day with the candle, but not necessarily a significant inside day. Closed below the previous day close, obviously, and previous day open. But we see the GEX ratio flattening out, so not a significant more speculation to the downside. Again, we continue to reach an extreme on the SPX GEX ratio. So this basically is indicating that we could see an overall bounce in the market. Again, this would most likely be met with selling unless we see a large change in sentiment and structure. This GEX ratio is short dated call gamma versus short dated put gamma. And basically it's flat now. So even though we're below the 1 point, we're not seeing significant more speculation to the downside, basically just status quo. So if we see an SPXP price appreciation move up, then we would want to see the resultant GEX ratio continue to move up, indicating short dated put gamma leaving the complex and short dated call gamma or out of the money speculation coming in. As you've seen, though, it's been fairly flat and below the 1 line. So the call or put speculators have been in control. and the bears are in control of the overall structure and sentiment. So again, we'll continue to watch this. But as you see, every bounce has been met with selling as the short dated call gamma is completely leaves the complex, and then we get the short dated put gamma speculation to the downside, rush back in, and then again result in price movement to the downside. All right, let's move on to our delta balance. Again, this is indicating the separate planes of speculation above and below spot price. So red dotted line is the left-hand plane, that's below spot price. Green dotted line is your right-hand plane, that's out of the money call speculation. And then the delta balance. Again, we see the right-hand plane, the left-hand plane with a slight positive slope, but we're still below the zero line, indicating put domination and put speculators are in control. Right-hand plane, negative slope, hardly any out of the money call speculation. So again, price appreciation will be extremely difficult. This is again indicating in the money puts overhead will be a significant headwind, and then a delta balance at -1 aggregate, indicating bears and put domination control. So even heading into the expiry, see a short-term blip above zero, but your delta balance is still pegged below zero, as well as the left-hand plane. The left-hand plane continues to drop then, but the right-hand plane with really virtually no out of the money call speculation to the upside, again indicating that price appreciation is going to be difficult. So if you're a bull, you'd need to see all three of these in a positive slope moving back above zero, indicating call speculation as well as out of the money put speculation is leaving the complex. But if we're below zero, we'll stay status quo with shorting any bounces, and then indicating that we're most likely in a bearish overall sentiment and structure. Even on out in time after the expiry, this would be Monday. So we'll see if this continues to improve after the monthly OPEX, or if we continue with the weakness in the overall sentiment and structure. All right, moving on to the SPXP GEX ratio. Again, this was an invaluable tool yesterday for us, indicating where market participants were positioning and speculating, and then how overall charm as well as gamma and vanna were, if they were going to exert or have any force on the overall structure. So today, out of the money puts below us at 66.40. Again, this will be a key level. For below that, we'll be adding negative deltas. In the money puts overhead at 66.70. I've discussed that level already. You'll notice that basically we're 10x in the money puts overhead versus out of the money puts below us. So again, significant headwind here. Net charm, significant headwind at 66.70 as these in the money puts. As long as we're below that level, we'll continue to grow and be a headwind. And then we have out of the money puts. I talked about that supportive type action towards 6,600, as we do have some in the money calls, but it's being overridden by out of the money puts. On the charm level, if we're above 6,600, these will be slightly supportive, not significant though, as you see the right-hand plane outweighing the left-hand plane. So we give the edge to those in the money puts overhead on a charm basis there. And then gamma, you see if we're below 66.30, again, we'll be adding negative deltas at a pretty decent clip. And then above 66.70, we could reverse to the upside slightly. And then vanna, significant contribution here in the right-hand plane of these in the money puts. 66.70 is that key level that we need to stay above. So yeah, absolutely. Cloudflare's down. So yeah, that's why we're not on X this morning. I don't know if it's repaired itself yet. So anyway, just a quick glance on the net stack command. In the money puts above us, out of the money puts below us, completely bearish, not even a locked horns state where we could be supportive. Out of the money, the only supportive type action would be at 6,600 with your out of the money puts, and 66.40 out of the money net delta here. But if we capture those, obviously, then we'll be adding negative net deltas and possibly move down towards 6,600. So key levels for today. Obviously, if you're a bull, you'd want to see this completely morph into green, which we've seen in the past. But right now, we're in a significantly bearish state. All right, let's move on to the SPXP SPXP 0 DTE. Put dominated for the day, significant negative net GEX. So we're not even close to being able to flip this to call dominated. Again, we'd have to have a about face in the overall market, significant monetization of puts, as well as out of the money calls come in. So key areas for today, we've already talked about 66.70 overhead. That's in GEX here, noted by the red dot and our previous day close. Again, always a key TA level. Also, if you're a trader, to the downside, we'd be looking for 6,600. If we get below 66.30, we talked about 66.40, we'd be adding negative net deltas. And then all the way down towards 65.75, we call this a node, but that's basically an opposing force. You'll notice it there via the net OI. So that would most likely be the cap to the downside, unless we see the overall out of the money put speculation really start driving. But that would be an area that we'd look for some stalling and most likely rejection if we lose 6,600. We would really have to recapture the top of DS at 6,670, as well as start getting into the transition area at 6,690 for us to even think there's a possibility for price appreciation. I could have drawn a red box here, but you'll notice just a significant red net delta overhead. These are in the money puts. And again, as long as there's no fear component from these in the money put holders overhead, they will continue to stay pat for the day and just continue to collect as we head into expiry. So again, really not thinking that there's going to be a large move to the upside, again, unless we see some snapback rally. So we'd have to see the puts close, out of the money calls come in, and then start adding positive deltas very rapidly for us to move up anywhere near the 6,690, as well as through the overall transition levels. So we'll continue with the state, as we said, via the market trend model and structure, as we'll continue to short the bounces unless we start recovering some of these key areas and we see this red net delta really starting to erode very rapidly via our intraday tools, where we look at call versus put speculation. We would have to have significant positive slopes on both of those tools, which is our vol M command, indicating that out of the money calls are coming in, and in the money puts or out of the money puts are also closing. Both of those slopes will be positive and moving to the upside. We continue to post the end of day recap. That is a video. When X comes back up, or if it does today, you'll be able to look at that recap and watch how the slopes move. Yesterday was a great example. We started out fairly crossed, but then we rapidly moved to a negative slope in the call and put centroid, indicating that there was out of the money speculation to the downside, and it was most likely going to be a trend day to the downside, a good day to ride the overall price action. All right, let's move on to our trading view chart. Again, we have our Game Edge scripts overlaid. This is the full expiry that I've overlaid here, and I've mainly drawn in our drunken sailor range as well as our zero DT transition levels. We also have a zero DT script that's available for Thinkorswim or Toss, whichever platform you're using. But you can see already this morning that 6650. So it looks like X may be back up. So let me see if I can go live. Nope, doesn't look like it. So 6650 this morning, we've already discussed that. That's a key area overhead that we'll continue to see rejections. Most likely, if we recover 6650, then the bottom of DS is 6670. We already talked about that. Previous day close. PGEX is really going to be important. And then up towards 6690, again, area in-trans transition there. All expiries is 6700 and 6690 there. So again, going to be key level there if we try to traverse up there. Most likely we'd see some stalling and rejection into that overhead area right there. But again, 6650 is going to be the area you want to watch on the open. And then to the downside, these previous lows we've experienced overnight. And if we get below that, we'd be looking for 6600. Below that would be 6675. So again, continue with the bearish state, put dominated. We'll continue to short any bounces. Yesterday was excellent opportunities to short bounces up towards 6650 multiple times that we saw yesterday, and then it played out extremely well. That gave our members opportunities to short those bounces again up towards 6690, and then once we lost 6650, over here we saw significant downside here at 6700. We saw significant downside there coming in. So again, key levels continue to be important overhead, as well as the transition levels and overall positioning within the overall structure and sentiment and market as well. So with that, I appreciate everybody for joining us. Obviously, X was down this morning, so we're live on YouTube here. As always, join us at gameedge.us. Check out the newsletter. You can put your email in here. You'll be notified for the weekend that we deliver this newsletter. It basically goes through all of our thesis, all of our content, and how we view the SPX option structure. So you can put your email in there. You'll be delivered for free. And then, as always, check out our education courses. These free courses, Game Edge Fast Pass is our flagship options course that you can sign up for and will be delivered into your inbox also. So with that, I'd be happy to cover any individual equities for everybody that is joining us. I appreciate it this morning. NVIDIA, yeah, we'll go ahead. Let me check this out. All right, so NVIDIA call dominated on all expiries still. So the structure does look halfway fairly decent. You'll notice the red net deltas coming in though. So obviously there's some out of the money put speculation coming into the overall structure. On the monthly expiry, we're still call dominated. So calls below us continue to be supportive. You'll notice that PGX is actually down at 180. CO and INGEX is at right now at 185. I would anticipate 180 continue to be an area that we hold. Obviously, I know we have earnings on Wednesday. We talked about 180 being that key area for this expiry. And then after this expiry, that was a key area also. 200 continues to be PGX and COI on speculation to the upside. So if we do get good news with NVIDIA, I'd be looking for the 200 strike to the upside. Tesla, let's look at Tesla. Tesla's eroded fairly decently for the monthly expiry. So call dominated still on Tesla. So larger strikes are still supportive. You're at the bottom of transition, which is extremely wide though at the moment. This monthly expiry, we are put dominated. So PGX to the downside 400, that'd be an area I'd looking for. Most likely that's a peak speculation monetization area. COI is at 415, so that would be the upside area if we do get a bounce. After this expiry, we still have 450 to the upsides PGX. COI is actually still up at 500. So call speculators after this expiry are still holding in fairly well, even though we're put dominated in your bottom of transition. So if we start seeing a bounce in the overall market, I would definitely go and look at Tesla to see if the structure is continuing to be supportive, and that may be one of the first stocks that is available to get in if our market trend model and the structure continues to be conducive of upside movement. So MU's call dominated below transition, so a little weak there. And net delta looks fairly decent for all expiries. Call dominated for the Friday expiry, so it's holding in there. 230 to the downside would be that peak area at COI, so I would anticipate we hold around the 230 level. Upside 250 is PGX. You do see COI down here at 220, so speculation's left the overall structure there. PGX COI 245, so that'd be the upside area I'd be looking for. Yeah, absolutely, cuts in color. And then downside 230 would be most likely the area I'd see MU continue to hold to the downside. So hopefully that helps on those. Yep, absolutely, Jay. All right. Thanks, everybody, for joining us. As always, manage risk. Again, 6650 overhead is going to be a key level. Yeah, I can look at Apple real quick. 6650 will be a key level to watch. Overhead. Take this last one here. Let's look at Apple. So call dominated. Structure looks great for all expiries. Significant call speculation still. Apple looks really good with the overall pullback in the market. I am a little bit surprised at that. So yeah, looks great. You're within transition here. You're right at PGX. POI is down at 250. So that'd be, that's puts peak speculation to the downside. But, INGEX is 26750 and POI is 250. Put open interest. 275 is COI or PGX, and then actually 280 is COI. So Apple looks really great. Let me see after this expiry. Call dominated still. You do see some puts right around spot price. So again, that could be some opportunistic speculation, but still in the money calls below and out of the money calls above. So towards 280. So I'm going to keep this on my list. Thanks, Burl. If we do see a turn up in the market, Apple may be one of the first ones that starts moving to the upside because it still is holding fairly well and the structure looks pretty good. So yeah, thanks for that. I'm going to jot that one down. Obviously, we cover Mag 7 every day, and I look through Mag 7 every day. I just haven't had time yesterday or heading in today, but Apple still looks fairly good in the sentiment and structure. So. All right. Thanks, everybody, for joining us. Make it a great day. Manage risk, as always. We'll see if X comes back up later and we'll be able to post. But thank you for joining on YouTube this morning. Like and subscribe. You'll be notified when we go live with our content. And everybody make it a great day. Thanks.